Ladies and gentlemen, welcome back to the channel and welcome to one of the crazier days in 2022, especially with AMC, because AMC gapped down pre-market, but you almost were able to recover all of those losses by the end of the day. AMC hitting an intraday low, a pre-market low of $4.11 per share, closing at $4.91 per share. And after the bad news that we got today, which is AMC and Adam Aron's fault, we'll talk about that a little bit later on into this video. With all of that happening, all of the good economic data that came out, which was a negative thing for the markets, AMC is still at the levels that it was just at on December 19th and December 20th, before this bad news even came out. So in the grand scope of things, not too much has actually changed, but what has changed is the Ortex data, cost of borrow rates, short interest. Guys, we got a lot to talk about in a very short amount of time. Hit that like button, subscribe to the channel for me. Thank you for doing that. I think we're supposed to get like 2 feet of snow tonight. It's crazy out there, man. You gotta hit the like button for me, because I might just get trapped in the house for a week or 2 weeks. I'm being a little dramatic there, but still, it's a lot of snow. Let's get into it, guys. So first things first, AMC, bad news struck the company. AMC plunges after theater company announces capital raise, proposes reverse stock split. And this is one of those things where I kind of chuckle, because it seems like AMC was like, we'll just announce a capital raise. That's going to be negative, but we'll say we'll do a reverse stock split, so maybe people will like that more. Now, reverse stock splits are never good. Just rule of thumb, a reverse stock split, never good. Throughout 2021, that was the weird year where like stock splits were good. No matter if they were splits, no matter if they were reverse splits, they were good. A reverse stock split is never good. Typically, a reverse stock split is done to stay listed on public markets. If you are a publicly traded company on the New York Stock Exchange, you have to keep your stock above $1 for 2 trading weeks. If you are unable to do that, you will get delisted. The way that companies can do that, if their stock just keeps going down, is by continuously doing these reverse stock splits. So just a good rule of thumb, if you see a company that does do a lot of reverse stock splits, not good. If the company's splitting their stock, that's a good thing, right? If their stock has got so expensive, it's done so well, they got to split it, gonna be a good thing. Well, now in this market environment, people are pretty keen to reverse stock splits are not good. It just lets them drive up the price again of AMC to raise more capital down the line and get more money out of it. You know, that's the problem and the dilemma with investors. That would be a fundamentally positive thing to do for the company. Like, this is not a bad move. This is what AMC needs to do. But for shareholders, not a good thing. And they did announce a $110 million capital raise. The company said the move would reduce its debt load. So we'll see exactly what they plan to spend this money on, where they plan to spend this money on. Hopefully we'll get that information. As of right now, you kind of just got to give them the benefit of the doubt. So there is that information. As far as AMC, like I said, you sold off pre-market, you kind of rallied into the close, only down 7.36%. You were down over 20%, especially in pre-market. It was getting very ugly. And even on CNBC earlier in the day, this AMC article was one of the top articles. It was what everyone was looking at, because the stock was just, you know, going down pretty big. So it was getting a lot of attention. Now, we also did get good economic news and bad news from some of the hedge funds. So it says investors saw a raft of strong economic data Thursday morning, including a revised reading on third quarter gross domestic product, which showed the U.S. economy expanded more quickly than previously believed. Growth was revised up to 3.2% from 2.9% from the previous update released last month. So GDP got a lot better, and it definitely got a lot better in the last quarter, but it's still being revised up even now. So that's saying that potentially the Fed could raise rates a lot more if they need to. Now, it says the number of Americans who applied for unemployment benefits in the week before Christmas rose slightly to 216,000, but new filings remained low and signaled the labor market is still quite strong. Economists polled by the Wall Street Journal had forecasted new claims would total 220,000 in the 7 days ending December 17th. So, just good data across the board. We're in a really weird marketplace, guys. It seems like there's no win. If economic data is bad, then markets are fearful about a recession. If economic data is good, people are fearful about the Fed. Like there's no positive way to put this economic data, and it can vary by day to day. Some days, this would have been positive. Some days this would have been negative, right? You got to take each day as a damn near brand new day in the markets because, things just are wacky right now. And that's kind of the best way to even think about it. Now, AMC, as far as this is concerned, now, what I find very interesting is the stock was super low, right? Down 20%, all that. You closed down only 7%. So the stock's seen a very nice recovery, and we're still at the same levels that we were at on Monday and Tuesday with AMC. So it's not like we've really created this new leg down. We didn't close at the bottom, so we closed at the very top. So even if tomorrow is positive, you might even go positive on the week for AMC. And what's key about that is that even though we recovered so much, the cost to borrow rates are still going higher. So we got in this situation where we got beat down temporarily. It shot the cost of borrow rates up. The stock recovered, but the cost of borrow rates are still going up. So it's one of those things where it puts a lot more pressure on the hedge funds. Now, if we take a look at the shares that are available to be sold short, there's virtually none all day long. We do have a cost of borrow rate from Interactive Brokers of 51%. This cost of borrow average number is 228%, so that's more in line with all of the exchanges, just highlighting there's a lack of availability to get your hands on shares, and a lot of people do want to get their hands on shares, right? Let's be honest here. That's why the cost of borrow rates are so high. Now, if we take a look at the cost of borrow max, sitting at 305%, cost of borrow minimum at 19.21%, in the live short interest of free float at 19.32%, almost at 100 million shares that are sold short. It looks like today only about 76,000 shares were sold short, or maybe that number is for yesterday. Maybe today's number has not updated yet, but I do think when it does, you're probably going to see a lot of shorts trying to take on a lot of new positions. Now, what was the big story of today, in my personal opinion, besides the news, besides the cost of borrow rates, is the option activity. It definitely spiked today with a lot more orders, 138 to be specific, from hedge funds. These are strange and unusual option activity, so it could be, paying a little bit more to get into a position right away. It could be a lot of contracts. It could be, a lot of different reasons, but these are done by hedge funds. These are basically catching the interest of Ortex's algo, essentially, and flagging them for us to look at. Now, out of those 138 orders, 4% had a positive order value, which is not good. You did see about $14.5 million worth of option activity. So if we don't see the short interest actually spike after this move down, you might just have got this move down off of the options. And I do think that is interesting, because if these options start to expire, or if the stock does continue to go up, a lot of people will sell out those options, and it could give you a pretty big boost back again to the upside. Now, the last thing that I do want to go over here in this video is going to be the economic data. If you guys have not seen this, if you're unfamiliar, if you don't watch this channel, well, a good reason why you should is because we've talked about this in like the last 4 or 5 videos just briefly, because it's going to be very, very important tomorrow. So 9:30 in the morning, I'm just going to list it all off to you. 9:30 in the morning, you got personal income month over month, personal spending month over month, durable goods orders month over month, PCE price index year over year, PCE price index month over month, non-defense good orders, Michigan consumer sentiment survey, the final survey for December, and you do have new home sales month over month as well as year over year tomorrow as well. So you're going to get so much economic data, it is literally going to make your head spin, and it's going to do the same for the market. So I think the overwhelming consensus is probably going to be negative for a lot of this data. Didn't break it. It's probably going to be negative since you know, it's just some of the other preliminary data points we've gotten, like retail sales, you know, that number was not good. So personal income, personal spending, durable goods orders, they might be negative. And if it's anything like today, the markets might take that with a positive light, that the economy is slowing down. The Fed might not have to raise rates as aggressively, or there's the chance that these numbers come in bad and the markets look at it like, oh, shoot, a recession's right around the corner. We're going to sell off stocks for that reason, right? There's almost not a win kind of scenario to come out of some of these data points. But obviously it is possible. Look at what happened today. Most certainly is possible to get that positive reaction, guys. So there is all of that information. Like I said, as far as AMC and the technical levels, bearish on the MACD, bearish on the RSI, severely oversold. The chart does look bearish as well, but with this reversal, if tomorrow can string together a green day, you might actually start to be able to close positive for the week, or close to positive for the week, and that would obviously be a very, very encouraging thing, guys. So there is that information. Thank you for watching. Hit that like button, subscribe to the channel, source your comments, questions, or concerns, baby, down below in the comment section. That is it. Most importantly, enjoy the rest of your day. Have a cold one on me as well. I will see you in the next one.